Trade war between the world's two largest economies, the US and China, has intensified, with Washington confirming taxes of up to 145% on Beijing, which has responded with 84% tariffs of its own. Mr. Trump told his cabinet on Thursday that a period of difficult transition was inevitable, but insisted investors were happy.
China's bold move in the ongoing trade war with the United States marks a significant shift in global economic relations. This is not just about taxes on goods or a disagreement over trade balances. It is a complex, high-stakes conflict that reflects deep-rooted competition between the world's two largest economies. While the United States has escalated the situation by imposing massive tariffs, China has responded with strategic countermeasures. The core question is, how far is China willing to go in challenging the U.S., and what are the possible outcomes? In February 2025, the United States began this latest phase of the trade war by introducing a 10% tariff on Chinese imports. This figure rose to 20% in March, and by April, the U.S. had imposed a historic 145% tariff on nearly all Chinese goods entering the country.
Had a big day yesterday. There'll always be transition difficulty, but we had in history, it was the biggest day in history, the markets. So we're very happy with the way the country is running. We think we're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
This was an aggressive and dramatic escalation. China responded with its own sharp increase, raising tariffs from 84% to 125% on U.S. imports. These numbers alone reflect the seriousness of the conflict, but they don't tell the full story. Rather than responding with general or emotional reactions, China's measures have been targeted, precise, and deliberate. Chinese tariffs focus heavily on American agricultural products, pharmaceuticals, and technology, all sectors where the U.S. economy is particularly sensitive. For example, U.S. soybean exports, which rely heavily on the Chinese market, have taken a massive hit. Farmers across states like Iowa and Illinois are already facing financial pressure, as demand from China has sharply declined due to these tariffs. This is not a random consequence. It is part of a calculated move by China to pressure politically influential American industries and rural voters. In the technology sector, Chinese tariffs and restrictions are disrupting partnerships, delaying projects, and raising production costs. Many U.S. tech companies depend on access to the Chinese consumer market, as well as components produced in China. With tariffs on both sides, these relationships are becoming more expensive and harder to maintain. China understands the importance of these sectors to the U.S. economy and is using its influence wisely. But China's strategy goes beyond traditional tariffs. One of its most impactful steps has been to tighten export controls on rare earth minerals. These are essential for the production of many high-tech devices, including smartphones, electric vehicles, and advanced military equipment. China controls the majority of the world's rare earth supply. By restricting access to these critical materials, it is directly targeting the U.S. technological and defense industries. This move is not just about causing economic pain. It is about sending a message that China can use its dominance in key global supply chains as a form of leverage. On the diplomatic front, China has taken its case to international platforms. It filed a complaint with the World Trade Organization, accusing the United States of economic bullying and violating global trade norms. Although the effectiveness of the WTO has been reduced in recent years, especially in dealing with powerful countries like the U.S., China's move still serves a strategic purpose. It positions China as a defender of multilateralism and international rules, which can help it build support among other nations, especially those who have also experienced trade pressure from the United States. Inside China, the government is managing public sentiment carefully. Officials and state media have downplayed the long-term effects of U.S. tariffs, calling them meaningless and unsustainable. Some Chinese leaders have even claimed that the current U.S. strategy will be remembered as a mistake or even a joke in global economic history. This kind of messaging is important for maintaining public confidence and avoiding economic panic. It also reinforces the idea that China is strong and resilient, capable of facing external pressure without compromising its goals. Despite the high costs, China appears prepared for a long-term confrontation. There is a strong focus on reducing dependency on the United States. This includes efforts to develop domestic industries in technology, medicine, and food production. China has already been investing in these areas for years, and the current trade war is accelerating that shift. The goal is to build a more self-sufficient economy that can thrive without relying on U.S. imports or exports. This is a bold and challenging path, but one that could reshape China's economic future. The effects of this conflict are not limited to the two countries involved. The global economy is feeling the impact. Financial markets have become more volatile. Investor confidence has dropped. U.S. consumer sentiment has fallen to its lowest level since the COVID-19 pandemic, and inflation expectations are now at a 40-year high. American households are experiencing the consequences in the form of higher prices on electronics, groceries, and everyday goods. Major financial institutions like JP Morgan and Deutsche Bank have issued warnings about the possibility of a serious recession if the conflict continues. Rising costs, falling trade volumes, and declining investment all point to a weakening economic outlook. And China is not immune. Its manufacturing sector is seeing reduced demand, supply chains are being disrupted, and jobs are at risk in export-dependent industries. But, unlike previous conflicts, both countries seem willing to endure economic pain in pursuit of long-term strategic goals. The World Trade Organization has warned that bilateral trade between the U.S. and China could fall by as much as 80% if current policies remain in place. Such a decline would have serious global consequences. It could lower global GDP by as much as 7%, hurting developing and developed economies alike. Many countries depend on stable trade relations between China and the U.S., not just for raw materials and finished goods, but for economic confidence and growth. Despite all this, the United States government remains hopeful. President Trump has stated that a historic trade deal is still possible, and that current tariffs are part of a negotiation strategy. The administration believes that maximum pressure will force China to agree to a more balanced and fair trading relationship. However, from the Chinese perspective, these tactics are seen as unfair and coercive. Rather than weakening its resolve, the pressure appears to be strengthening China's commitment to its own path. China is now playing a longer game. It is focusing not just on short-term responses, but on building an economy that is less vulnerable to foreign pressure. That includes increasing trade with other partners in Asia, Africa, and Latin America, as well as investing in infrastructure, research, and industrial development at home. While this may not provide immediate relief, it lays the foundation for greater independence and strength in the years ahead. So, how far will China go to challenge the United States in the trade war? Based on its current actions, the answer appears to be as far as necessary. China is demonstrating that it will not simply accept U.S. demands or back down under pressure. Instead, it is using every tool at its disposal: tariffs, supply chains, international diplomacy, domestic reforms, to protect its interests and reshape its role in the global economy.